Welcome back to Finance with Madhvi, and today we're going to be looking at one of the most exciting and risky topics in finance: day trading. If you've ever wondered how people make money in a single day, or sometimes even a few minutes, this video is for you. But spoiler alert, it's not as easy as it looks. This is our agenda: what is day trading, how it works, tools you need, and the risks involved. Let's begin. Let's start with the basics. What exactly is day trading? Day trading is when someone buys and sells a financial asset, like a stock, within the same trading day. This means you don't hold it overnight. You buy it, hope it goes up or down depending on the strategy, and sell it before the market closes. Day traders are trying to take advantages of small price changes. So instead of waiting years for their money to grow like long-term investors, they try to earn small profits many times a day. For example, let's say if you buy a stock at $10, right? A few minutes later, it rises to $10.50. You sell. That's a 50-cent profit per share. Per share, not much, right? But if you trade hundreds or thousands of shares, those little gains add up. But keep in mind, it can go the other way too. How does it work? So here's a quick breakdown of how it works. So usually there's four types of ways, but I listed three in there. I'll be explaining four. All right, so number one, stock selection. Day traders usually pick stocks that have high volume, lots of people trading, and high volatility, big price swings. These are the stocks when there's action. Technical analysis. So, this is where charts come in. Day traders use patterns, moving averages, indicators like RSI or MACD, and trend lines to guess what might happen next. Making the trade. Once they think a stock is about to move in a certain direction, they jump in. Sometimes they hold for hours, other times just minutes. Exiting the trade. The goal is to exit with a profit. If the stock doesn't move the right way, they may cut their losses quickly. Good traders don't hope, they plan and act. The real secret is discipline. You can't get greedy or scared. One wrong move and your whole day can crash. Next, what are the tools you even need? So, if you're thinking, this sounds pretty cool, well, what do I need to start? Let me break it down. Number one, a trading platform. This is a lot, but let me break it down. This is the software app you would use to place trades. Some popular ones include Webull, good for beginners, has free tools and clean charts. TD Ameritrade's Thinkorswim, very advanced, used by many pros. Robinhood, super easy to use, but not great for day trading because of limited data and tools. Choose a platform that offers real-time quotes, trending tools, and low or no fees. Number two, fast internet. Speed is everything in day trading. Prices can change in seconds. A delay can cost you money. A reliable laptop or computer. You don't need a gaming PC, but your device should be fast and not freeze up when you have charts open. Pro traders even use multiple monitors, one for charts, one for the news, and one for trading. 4. Trading tools. Most platforms come with built-in charts, but some people use TradingView for even better visuals. You'll be looking at candlestick patterns, volume, trend lines, and indicators like RSI. It tells if a stock is overbought or oversold. MACD shows momentum and trend changes. Moving averages shows the average price over time. Number 5. News and stock scanners. Breaking news can move stock fast. Use scanners to find the hottest stocks each day. These are tools that filter for volume, price changes, and news catalysts. Part 4. Risks of day trading. Okay, here's where I get real with you. Day trading might look glamorous, money flying everywhere, fancy graphs, but here's the truth. Most beginner day traders lose money. Let me explain why. Number 1, it's tough to predict short-term price movements. Emotions take over easily. Number 2, emotions can predict so much with day trading. One bad trade can make you panic and take more risks. Number 3, commissions and fees. These can add up if you trade a lot, though many brokers are now free. And most importantly, if you don't have a solid strategy, it's basically gambling. So don't go in thinking this is easy money. You have to study, practice, and be okay with losing sometimes. Okay, I am so grateful, but before we end today's videos, I want to give you some extra tips. If you're still interested in day trading, here's some beginner-friendly tips. Start with a simulator. Use paper trading tools or fake money to practice without risking real cash. Webull and TD Ameritrade both offer this. Number 2, only trade with money you can afford to lose. Never put your savings or emergency fund into day trading. Number 3, create a trading plan. Know exactly when you'll enter a trade, when you'll exit, and how much you're willing to lose. Stick to 1 or 2 stocks. Don't trade 10 things at once. Master one, then move on. Number 5, last one, keep emotions out of it. Never revenge trade after loss. Stay calm. Please stay calm. This can have a huge impact. So there you have it. Day trading 101. Fast-paced, risky, and definitely not for everyone. But if you're willing to learn, practice, and be patient, it can also teach you a lot about the stock market. Want me to break down day trading strategies or chart patterns in the next video? Comment below. And if you like this video, hit that like button, subscribe, and share it with a friend who's always saying, I'm gonna make money trading. Until next time, stay smart and keep learning. This is Finance with Manvi, signing off.